JB here, JB here. Hope everyone's doing outstanding. Thursday, January 2nd, 2025. Happy New Year. It's about 3:30 here. Going to talk really quick about the markets as I'm looking at and go from there. But S&P and markets started 2025 in grand fashion. It was going to be a great start to the year. And then we kind of started to sell, fade the open. And then around the noon hour, or about 12:15 or so, just someone hit the sell button and the SPY went from 580, 588.54 all the way down to 582 in a matter of a half hour. So, uh, any news catalysts that you could really see? I mean, this morning, there's the home sales data. What was the mortgage rate? Well, the mortgage rates were still remain high, and then supposedly the last 2 weeks of December saw a 20% decline in home sales. Then you have reports out this morning that Apple's cutting prices in China due to competitive concerns. So Apple was getting a little pressure in the morning, and then Tesla, while I was on the rant this morning, announced their deliveries. And the deliveries, I mean, if you were looking at Tesla 5 years ago, to think that they would deliver was 1.7 million vehicles, something like that. Just an insane amount of vehicles. But they missed by like 50 or 60,000 cars or what have you. And folks, I mean, there's still a lot of folks who embarrassed the name, they took advantage. So, considering the weighting, and both Apple and Tesla are in the top 10 weighting in the S&P. Apple's the number one weighting, over 7.6% weighting of the S&P. So when those sell, it doesn't matter what the other stocks do. They have very small percentage weighting. So that's some of it. I don't know why it all happened here at 12:15, but that's what it is. I was looking, that 585 handle's kind of been the line in the sand. So it happened quickly, and by the time I looked at put hedges, the premiums, they just didn't make sense unless I thought maybe there was going to be a move down to 575 or so, like another 1% move. And markets, today's a Thursday, although we were closed yesterday. So tomorrow's option expiration, I just figured I would just sit on my hands. So in lieu of getting hedge positions, I was actually looking at MDB again, but MDB was at 240. Thankfully, didn't grab those. So more or less saved the trade by not taking a put hedge. So we'll see what happens here. Headlines now, of course, as markets show a little weakness to start the year. It's the worst end to the year of last year. 2024 had the worst ending in 50 years, right? And now the narrative, especially if we close red today, will be, oh my gosh, just here we are. Then people are starting to compare where the market is right now from the election. So the election bump is gone too, and so it's all great narratives. And to think, it's very easy to panic. So to sit there and see things falling, you're like, wow, this is it. This is the bear market everybody's been talking about, what have you. And maybe at some point it will be, but more times than not, it becomes at least even an intraday by the dip, and that looks like we're getting that here today. We're back at 585 on the SPY, and then we'll see how the rest of the week pans out, especially if Apple and Tesla can find some footing. Apple's down 4 sessions in a row. I mean, that's an insane amount of market cap for Apple considering, but I mean, that's some of the reason why S&P is going to be down 4 sessions in a row, pending if we get any crazy, well, not crazy. We just need another dollar here on the SPY. So that's the overall markets, 585, a key spot. I was hoping we were going to close over that 50-day moving average at 591. Looks like that'll have to wait. And then, glass half full, glass half empty kind of stuff. So if you're a bear and you look at this, and the S&P has, at one point, it was 16% of the stocks on the S&P were trading above their 50-day moving average, which is not a good thing. But if you take it out, if you're a bear, you're like, well, we're in the middle of a downtrend. We still have ways to go. On the flip side, it's usually marks the bottom of some of these pulls. And I mean, what were we? We were like 4% from, excuse me, I don't know the exact percent from all-time highs, but we're still right there. Excuse me. And the other thing we saw in the afternoon, yields were actually reversed into the green in the afternoon, then have come back into the red. So certainly watching that. And now the story too, it seems like a couple months there's a new story, and I wouldn't say a new story, but the US dollar, right? So when you see 10-year yields starting to continue to rise, and then you see the US dollar strengthening, multi-year highs here too, at some point there's going to be some impacts. So hopefully the market's kind of priced some of that in already, and we can work things out and tomorrow end the week in a positive note, and go from there. Small caps were outperforming this morning. And I thought, okay, this is great. The small biotech sector, which has been just in the doldrums, especially after the election, the IBB was actually up over 1% today, outperforming as well. And, all good signs. Like, wow, this can be a good start to the year. I mean, IBB is still up, but we'll see. So only one day so far in the year. All right. So individual names. First, I'll talk about TripAdvisor. So rumors this morning. Well, earlier today, Amazon. Well, not rumors. I forget the name of publication. I don't know if it was Financial Times or one of those came out saying Amazon may look to acquire Lyft. It was just more of speculation than any kind of concrete news, I would think. But I always look at the relationship you have Uber and Lyft, and if if Uber's watching and thinking that Lyft's going to get acquired by a company that might be able to use their platform to become a super app, here's Uber's chance. It might force their hand to rush into some kind of M&A. And talked about already Expedia, but I think TripAdvisor is right in the crosshairs as well. Either way, it's over here at $15. It hit 15.24 earlier today. And you take a look at my support resistance lines. And these I didn't just draw this in, but it came right up to it, found resistance at that 12.15 pullback. And then it's still in the green here. So we're up 2%. I would love to see it close over 15 here today. Slow and steady. I would love to see the premium start to creep up as well. I mean, the strikes I'm in are green, but if you get to $16, it'd be nice. I lock some of my January strikes in and just continue to hold those Junes. Still such a great story. One of my favorites here into 2025. Solar Edge. I was talking about the January effect this morning on the rant, and then right at the open, you saw some of these names: Teladoc, Solar Edge, even Peloton was up last year, but some of these names that have been taken on the chin, rallying. No news, no catalyst. So I went and got some more Solar Edge calls. I think at some point it's gonna break out. It's gonna be a multi-day monster move, monster squeeze, up near $20 and beyond. So got those strikes, have some more time on the calls. Unfortunately, some of the other times I've played it have been futile, but the time it does break out is going to more than offset the ones that have expired and then some. At least that's my thought process there, and that's why I continue to look for opportunities, because the time I'm not in the calls is usually when it's going to run, right? So I don't want to be in that position where I'm kicking myself after the day after option expiration and watching the stock go bonkers. That's Solar Edge. And then I'm still looking at some of my names, my top 5 stocks that I talked about in my top 5 stock webinar yesterday. But EverQuote, if you didn't listen to my top 5 stock webinar, that's one of them. No debt, fundamentally sound, 80 million in cash. The middle person in the insurance space, especially in the car sector, which is rebounding. Although Rindenberg Research this morning came out with a short piece on Carvana saying that's not the case with the car sector. But not here nor there. Still looking for some strikes. I think it trades north of 25 in the coming weeks. Just a monster quarter. Last quarter, if there's continuation, it could be a monster runner in 2025, 30, 35, 40, if not higher. Also on a side note with that Carvana piece, Hindenburg's one of the few, I shouldn't say that negative to anybody, but they're one that I actually respect and read their research. And a lot of times it's not filled with speculation or non-factual commentary. They actually have like solid insights, solid financial, all that fun stuff, right? So with the Carvana, there's definitely some concerns there, but they've always been there. And every time Carvana starts to run, and it's had multiple runs of thousands of percent, it seems like all the short folks come out of the woodwork because a very easy name to short. Like, who would think that that you could have a service like Carvana to buy a car? Like, you would think not in your wildest imagination that this would be possible, but it is, and it's become more mainstream. But the big concern with the Hindenburg short report wasn't a big concern, but to me, the overlying theme was that there's a debt issue, right? And their credit ratings garbage, but their valuation is not garbage. They could they have like $3 billion in debt. They could just do an offering in 2 seconds and erase that as a concern. So to me, if your bear case is wrapped around that debt thesis, I get it, and you look at its multiples, the PE multiples, and all the all those metrics that you look at for a company and say, wow, this is overvalued by any other metric, then by golly, it sure looks like it should be trading substantially less, but it's not, It's similar. Like you make people always come out with the same bear case on Tesla and say, wow, the whole way as the thousands of percent it's run, one of the big arguments was it's a car company. All the bears would always say that. And then all of a sudden it's like, oh, Tesla's valued more than General Motors. This can't be, right? They only sell this many cars and then it's, oh, General Motors and Toyota don't even have the same valuation as Tesla. And then it's all the automakers combined. And then it's that by multiple, and if you're short, obviously you're banging your head on the wall. I remember all these folks on Tesla used to come out with these short pieces about competition. Oh, the new Porsche is going to destroy Tesla, and it's like, here we are, fast forward 8, 10 years or whatever. And anyway, rants for other days, but sometimes some of these names just mystify, especially on the short side, until eventually they become mainstream and profitable and a cash cow, like Netflix, like Tesla, which wasn't generating any cash and almost became bankrupt. Rants for other days. All right, so that's EverQuote. Sorry to get on the tangent there. Some other names here. So Swim, Latham Group, and I'll probably call it Swim if I do enter calls because it's just easier to say that, and it makes more sense considering they produce fiberglass and vinyl liners and other accessories and things for pools. Number one uh, manufacturer in the U.S. Uh, but they're down today, which is one of my top 5 stocks. So I take it kind of like a good thing because they'll give me an opportunity to get some inexpensive calls. The thing is, you take a look at Pool as well, and Pool's down over 2%. I don't know if some of that has to do with the yields. I talked about it on my top 5 stock webinar. The big issue or drawback right now with the pools and the decline of 50% since 2021 in new pool starts is because number one of rates, and then number two, people they want to move, right? So they're waiting for the rates to come down so they can find a house with a pool, and at some point they'll start to tap their equity to get these installations, right? So anyway, an opportunity, but I'm watching Pool today too. It's down 2%, so kind of makes sense there. But at some point I'll look to get some strikes there. It's under its 50-day moving average at is it 647? What do I have here? I guess so it's right at its 50-day moving average. All right. And there's Pool on the chart. And then Intuit finally, like a trapdoor under its 200-day moving average, 631. It's trading at 621.44. Let's see. I was looking at that when it started to pull, and you start looking at the long term here. It hasn't hit close at these lows since November, so it could be one of those names I add some puts on tomorrow if there's weakness. The thing is, they do have weekly strikes. They're just kind of expensive, so I'm just gonna be patient there on Intuit. I'm trying to think of some of the other names I'm looking at here. EverQuote, TripAdvisor. Lemonade, disappointing, right? But if you look at a chart, that bull flag formation is still active, right? It hasn't been confirmed or denied. So if you break under 35 and it came close earlier today, that would kind of nix that for now. But still like that name. And again, it's some of the reasons I find some of these names is they're in the same kind of space. EverQuote came to my attention when I start doing due diligence on Lemonade. I said, wow, that's an interesting story, right? Funny how it works. Other names I'm looking at, and Weave is another one. Weave Communications. That one's down to, or was, took a big hit this morning, all the way down to 1540, only down 1% now. But at some point, I'll look for some strikes there. WW rallying today. So again, it's like some of these names that have just been beaten are finding bid today. Fubo's up nearly 11%. And then OX, which, kind of on the sidelines there because I've traded that on and off a couple times over the years. Nano X Imaging. NVIDIA has a stake, but it's kind of like one of those side stakes. It was an accidental stake because they acquired a company and that company had a stake in NNOX. But with NNOX, it seems like there's some folks who I kind of respect on who are negative the name, who thinks it's almost like I wouldn't say it a scam or fraud, but I'm watching it today and it's rallying. It was at 750, went all the way up to 948, so a $2 run on this name. So you're talking a 30. I think it was up 45% or so intraday on no news, right? So interesting story though. I mean, it's a great story. If you can, anybody who's in the health space, or if you've been sick and you go get you need imaging done, and you can have a program now that pretty much on the spot can give you analysis and diagnose you, and then in this day and age where, hey, treatment might be of the utmost importance, the sooner they find out something and the quicker they treat it, the less worse it becomes, right? The longer you let an ailment go, typically it doesn't get better, right? So great story. Going on too many tangents here. Anyway, 17 minutes to close. Have a great day, folks. I'll be back rock and roll.